Hello, financial crime fighters. We have all heard about AML Business Risk Assessment, generally known as Enterprise-Wide Risk Assessment, and its significance under AML regulations. Adopting a risk-based approach to identify money laundering threats and evaluating possible risk mitigation measures is recommended. AML Business Risk Assessment is crucial to evaluate financial crime vulnerabilities and ensure compliance with AML regulations. It helps you identify AMLCFT risk exposure, which is necessary to determine the preventative and remedial actions required. The video here lists the various risk parameters for assessing overall business risk. While conducting AML enterprise-wide risk assessment, the regulated entities must consider the following risk aspects: customer-specific risk or risk arising out of business relationships, geographic risk, risks arising from the product or service involved, transaction-related risk, delivery or distribution channel-related risk, technology-related risk. Other relevant risk factors, depending on the nature and size of the business. Let's explore each risk aspect in detail, with a few examples and the degree of AMLCFT risk involved. One of the key risk factors is the type of customer and the business relationship you have with them. For example, the risk is low if the customer has a simple ownership structure and transparency around ultimate beneficial owners. But a customer with a complex legal structure and an unknown UBO can pose higher risks to your business. The risk for your business is high from a customer if it is a designated non-financial business or professional, DNFBP, financial institute, or virtual asset service provider, VASP, associated with AMLCFT typologies. While other businesses, not exposed directly or indirectly to financial crimes, pose a lower risk. Any linkages or associations with high-risk professions can pose a high risk to your business. The regulatory or supervisory framework in the country of your operations, as well as the jurisdiction of your customer, can also impact the risk profile. The risk is low if the country has stronger AMLCFT regulations and is not categorized as a high-risk jurisdiction by FATF or other international bodies. The contrary situation can prove riskier for your business from an AMLCFT perspective. If there are no international sanctions on the country, your geographical risk is manageable. But relationships with countries subject to sanctions pose high risks to your business. Customers hailing from countries with higher levels of corruption or less transparency around financial reporting requirements increase your business's risk. The nature of the products or services the business offers is also a critical risk factor. It is hazardous if the product or service is of real estate or precious metals or connected with other AMLCFT typologies. If you can easily monitor the ownership of the product, or there is a strict documentation requirement for ownership transfer, then the AMLCFT risk arising from such products or services is low. But if there is no transparency around ownership details, or the process of ownership transfer is easy, without any audit trail, then such items pose an increased risk. If the transaction is complex, multiple parties are involved, or the transaction is legally or technologically complicated, then the financial crime risk involved is high. If the transaction frequency is high, or the value or size of the transaction is unusually high, it becomes a high risk for businesses. Delivery or distribution channels involved in the business relationship impact the overall enterprise-wide risk assessment. The risk is low without the involvement of intermediaries, the client's willingness for physical meetings, or payments happening through the customer's own bank account. But if the client stresses involving intermediaries without any business sense, or the payment happens through an unrelated third party, such factors pose a higher risk. Technology-related aspects can also pose risks to your business. The risk is high if the technology is less secure and more prone to hacking and phishing. Emerging technologies like virtual assets and cryptocurrencies also increase AMLCFT business risks. The overall business risk assessment must be dynamic and maintained up to date. Updated risk assessment is critical to ensure that the organization's AMLCFT program is relevant, aligned with the AMLCFT risk exposure, and sufficient to manage such risks effectively. Trust that this video helps you conduct your enterprise-wide risk assessment adequately. Stay tuned for more insightful videos on AML. Don't forget to like, share and subscribe to our channel, and hit the bell icon so you never miss a video.